Good morning, traders. It's 8:03 a.m. Chicago time on the 8th of July, 2021. It is Thursday. This is episode number 2013. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Today has been a selling day so far. You could see on the Convergent Trading pre-market summary sheet in front of you that risk is strong off. The allocation is to safety. We see a pop in the yen and in gold, and we're seeing that the T-bonds, the 10-year notes, and the Bund are higher. Copper taking a bit of a hit. Crude is back, coming back towards the $70 mark after wrangling back and forth between the United Arab Emirates and OPEC Plus. It looks to me like we have a day where we're likely to see pretty decent opportunity, huge range in the overnight session here, folks. We have 73 points, 73 points. The mode for the overnight session is 23 points. We've multiplied that by 3. And with the overnight inventory at 99% short, 99% short. And to top that off, we have 408,000 contracts traded versus the mode of 190,000 at this point of the session. So we've already exceeded our daily range stat, which is right up here. Daily range stat for the ES at 50 points. We've already exceeded that. This stat, of course, is coming off of the RTH session, but we've got quite a bit of action in the overnight session, mainly, supposedly, mainly driven by real concerns about growth and inflation. Many have seen the meeting minutes, the FOMC meeting minutes yesterday, and have read into the Fed basically starting to taper or talking of tapering. On top of that, the COVID Delta variant spread. About 50% of the cases in the United States are of the Delta variant, which is the most aggressive variant of COVID that we've seen so far. There's also continued concerns of inflation, although the Treasury futures have been climbing, and so yields have dropped. Yields dropped yesterday as well. It seems like movement is to safety, as previously mentioned. And the last piece is a really important labor shortage, to the point that fast food restaurants and other providers are having to pay incentives for the first time, cash incentives for new hires. So all of these combine to give us a day like today. Now let's put today in perspective, right? We're going to have a whole bunch of people show up in whatever feeds you're on, CNBC, your Twitter feed, your Skype group, your Discord server, whatever, all of them preaching the end of the world. But really, we have not even breached last week's low. We in the S&Ps, we're still quite near all-time highs. We just put in all-time highs the day before. So let's calm the excitement down and regain perspective, and make sure that we're sticking to our plan, as opposed to being fed a bunch of information about how this is the top. We don't know. It could be. Not likely, but it could be, and it's something we have to be aware of, that we don't want a high degree of emotions coming into trading today just because there's movement. Today, 11 o'clock, gasoline and oil inventories. They've been pushed back by a day due to the U.S. Independence Day holiday on Monday. China inflation rate this evening at 9:30 Eastern, and that's about it. Again, I want to remind you to sign up to follow twitter.com/conv trading to get this pre-market summary sheet at 8:50 a.m. Eastern U.S. time every morning. If there are terms or words that I'm using that you don't understand, you can go to ct.pro/glossary of terms. Here are the URLs at the bottom right corner of your screen. Go there if there are questions. Again, volume is quite high, 412,000 so far in the overnight session versus 190,000 mode. And inventory is 100% short, almost, with 73 points of range. The point of control, the overnight point of control, is at 42.94. So that's what we've got. Let's jump into our review segment. Yesterday, I expected a pullback to 36. Here we go. Yesterday, I expected a pullback to 36 and then a rally into 54. 54 being right up here. 54. We missed it by 3 ticks. 54. The pullback was a lot deeper than expected. I expected the pullback to hold in this range, so I was looking for it to push down into 36, consolidate, and then push back to 54, and then come off into the close. The secondary scenario is a push higher to take out the overnight high, and then a squeeze down into 24, 25 before it rallies back in and holds sideways. That was scenario 2. So scenario 1, scenario 2 combined yesterday. So there was a fair number of opportunities, in my opinion. Some pretty straightforward setups, short and long. The one that looked a little more obvious to me is although the sell-off was clear, it was the buy side setups that looked more obvious to me as the market progressed yesterday in real time. So this expectation that we are likely to push up above 36.5 once we were pushing into the 20. There was a lot of activity, a lot of defense. Once it fell through 35.50, it looked to me like there was a lot of passive buying. And then once we got this big rotation up of 10.5 points, I expected the continuation of pushback above 36.50 again. All of that shared with Convergent Trading members in the Head Trader channel. What we ended up yesterday with is an excess low with a market that had a weak high with a point of control in the upper part of the range on a neutral extreme up close. Yesterday, believe it or not, yesterday was quite the bullish close. The delta moved back to 0 after pushing down with price. Couldn't quite get positive, but then the market didn't really move away from the open very far, which is the relative 0 mark for delta. So the expectation is that overnight it would push that 54 measured move target. Remember, we have this 50 mid-century figure here in the way, and there was a lot of trading around it. Settlement was at 49.75 settle yesterday. From there, what we did was we held steady on the cash close and then came off, and we've been doing this for the last 3-4 sessions. We came off, consolidated, and in general, what happens is the European session opens, which is right here. It generally pushes back up, consolidates, and then we end up opening up to push higher, pull back, and then squeeze higher. So we've had these V bottom days, multiple days in a row. Okay, so we've had V bottom after V bottom right here. We've had these rejections of lower prices and a market that's not giving up the high. I talked about this yesterday. And what we did today is unusual in that we turned right over and we sold off. So this entire move down is one basic impulse. It did hesitate here in the middle, but it's one basic impulse. So we expect this low to be taken out. And the low is taken out, but not by much, from about 80 to 79, 80 to 79, not very much here. And it's not coming off that low. So this may still have another leg down in it. We've expanded the overnight low, we've expanded the range, and we have pushed. We're likely to open below yesterday's low. So we had the one-time framing up taking place from way back here from 3 weeks ago. We had that one-time framing come to an end on Tuesday. And then I said that this puts us in a neutral stance. We'd want to see what yesterday did. If it puts in a higher low, then it might trigger one-time framing to the upside, depending on what it does today. And what it's doing today is it's opening in a gap below. So we have a gap rules apply. We have a gap zone above us. We're gapping below Tuesday's open, but really we have not pushed through and held yesterday's MC point of control. So all in all, again, just to make sure you've got perspective, all in all, we haven't accomplished much on the sell side. The S&P is opening down 71 points, 1.5%. Nothing too dramatic. The Russell, of course, getting way ahead, down 2.2% from yesterday's settlement. But what have we done? We are really just tackling the prior week's MC point of control. And if you remember, I talked about this on Tuesday. The prior week left us with a lot of weak structure. Look at that structure in the profile. The auction was very active, and we have many high volume nodes in last week's trading, and that's not good structure. Good structure looks like a fat middle, and that means when we get a fat middle, it means that we have found balance, which is what the market's ultimately seeking. Don't forget that. The market's not here to screw you out of your money. The market's here to have as many buyers and sellers match up a price as possible. The market's job is to find value, not to screw you out of your stops. Don't believe any of that nonsense. It's defeatist thinking, in my opinion, not meaning to criticize anybody in particular, but whining and moaning about what the market has done with your trade isn't going to help you. It's best to keep focus on what it's actually doing in its mechanism to discover value. And what we have here is the market going back and now opening today around the MC point of control, the most valuable price area from last week, which makes total sense. We do have weak structure in the week before it. If you look at the week before it, we have another kind of toothy profile, which tells us there's some discovery to be done to the downside. Hey, I'd like nothing more. No offense to anybody's 401k portfolio or position, long position. I would like nothing more than to see this thing drop 4.5%, 5%, just to shake loose the buy and hold and bring in some volatility and bring in some opportunity, in my opinion. I'm not a perma bear. But these grind rallies on low volume, having 700,000 contracts or 800,000 contracts a day on 12 points of range isn't my idea of fun. But let's be realistic. It is the summer. 700,000 contracts in the RTH is at the low end of the range, and we have been trading. We have been around these prices, this volume, quite a bit lately. So a little sell-off is healthy, a bit of a purge, a cleanse. So The point being, by showing you this chart, is that nothing crazy has happened yet. Let's take a quick look at what we've got in terms of order flow. So looking at the order flow scene, we see, there's quite a bit above. This is this heat map's coloring based on what is visible. Let's reduce the cumulative delta here. It's painting based on what is visible, and you can see there are teeth here and there. 09, 07, cluster at 4,300 as we would normally expect. A little bit at 42, 92, 25, a little bit at 86, and so on. But overall, there's no real large commitment here in terms of a block that is resting in the order book. So, climbing all the way to all-time highs, the biggest block we have is at 43.60 above the highs. So the order flow so far is not really telling us very much. Looking at the delta and how this thing is kind of shaping up, it is looking stable at the moment. It's looking like it's stabilizing. You can see it right in here that the trade is stabilizing pretty well. Delta stable at negative 8,700. It was like a negative 9,200 just 10 minutes ago. Everything is kind of holding steady in a holding pattern, and we're trading up against or near the overnight point of control. So it'll be interesting to watch which direction this thing moves into as it opens up. This is the big picture here for the overnight session. For the overnight session, some clear structures to contend with here. Clear box areas, so to speak. There's some resistance right in here. Right in here between 43.15 and 4,300 is a fair amount of resistance. We're holding the lower box right in here. We have not moved away, and this is why earlier I said this looks like it has another leg down in it, in that it has not tackled higher prices, and you could see that it has put in this clear low volume node. This is what I'll be watching. It's really there's a line in the sand here, right in here in the 4,300 area. Does it stay below 4,300 or does it get above? If it gets above, does it breach the overnight mid, which is at 43.15, which coincides with this block right here, this box right here of activity? So the question is, does it get above 4,300? And if it does it take out the full session mid at 43.15, 75, 43.15? I just, I can see that the delta is starting to move up a little bit, but overall the rotations are sideways. The bottom pane is showing the rotations. The rotations are well contained since the low has been put in. The rotations are inside of our limits. Our limits are plus 6.5 point rotation and negative 6.25 point rotation. They've just been sideways. You can see the last rotation is only 5.5 points. The one before that is 6 points, and so on and so forth. There's really not much going on. This is a market that's in a holding pattern. So we expect a fair amount of activity on the open. Let's look at what's expected for today. Turn on stock zones, master levels, and it's a pretty noisy chart this morning, given that we have a fair amount that has happened. But hey, nothing should surprise us here, right? We've been around the markets enough to know that we may put in all-time highs again today. We may have a V bottom yet again, and I outlined these for you. We had a V bottom the day before yesterday. We've seen quite a few V bottoms come into the market. Sell-offs have been bought every single time, and every time it looks like it's dead, it's done. It really isn't. So again, Look for the double O's here. What does it do with the double O's on the open? Look for the 15. Where is that? The 15 right in here. The 15. This is an important area. And that brings us to yesterday's low, right? Yesterday's low is at 20. This is what's important when we open up. So we're opening up against the point of control. I'm expecting an open auction out of range. I'm looking for responsive buying to the 4,300. I'm looking for a challenge here at the 4,300, potentially pushing to 4,305, which was the low a couple days ago, 4,305. And I'm looking for it to fall through and then squeeze that low at the 79 from this morning. So the overnight stat, 79 and a quarter, expecting that to be taken out. And if we do, then the next big area to test is the prior week's low at 64.75. Not expecting it to get there, expecting it to come back into the point of control area and hold steady. That's scenario one. So a push through double O up to 05. Not expecting it to get to 15, but who knows? That'll be the second scenario before it fails, rolls over, and takes out the overnight low at 79 and a quarter for a test of towards or of the prior week's low. The prior week's low is important as it ends the one-time framing up on the weekly. I know that's a lot to digest, but there's a lot going on today. The secondary open auction that immediately pushes through, gets the overnight stat, pushes under, consolidates here in the 69.70 area. So we've got 70 right here, comes back in, consolidates, and then starts to push later into the session towards the 15 again. Towards the 15, that'll be scenario 2. So on scenario 2, if we push through and take out the overnight low and we see that the bids are being hammered and there's no movement on that, then we're looking for a long back to the overnight point of control, which is 94. And if 94 gets taken out, then we're looking for the double O, 05, and 15. That's the plan for the day on those two key scenarios. Given that it's out of range in a gap, we normally have scenario 3, but I've talked enough. You can come up with that yourself. I hope you're learning something. I hope you're gaining something by being here every day. I know many of you count on comparing your plans with me, which is great. I don't know if I'm right or wrong, but it's better that I come in with a plan than to just wing it from the hip. Good luck, and I'll catch you tomorrow morning. Take care.